The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. We're going to take a look at the bonds notes, and then we're going to take a look at the financial sector ETF. And we're going to go right to the notes here. And this is with the volatility in the stock market. We're going to go over the S&P and the levels here in just a second. But amazing stuff here with the 10-year and the 30-year. Got a new profile that happened on Friday, closed above there. As you can see, we kind of opened up and came back and kind of retested that close above. And remember, those are really powerful setups to me if you watch the show. And the low here, 128.17, the inflection point's 128.15, 16 up in there. Those were all pointed out actually in the scanner that we use. I use religiously, actually. And I'm going back into that section with the 10-year here, and here we go. And there's the new inflection points, 127, 15, 16. That's in decimal form down there, 127.539063. But as we look at that, I'm just going to reference the breadth here. A little glitch there. As I reference the breadth, knowing that the S&P breadth is positive, we're going to talk a little bit about that. I got chopped up a little bit last week. I want to kind of go through what I was going through, and hopefully we can learn from it as a whole, as that thing was kind of a wild scene last week. I think we rallied about 80 points on the S&P, and then in 36 hours, I think I counted up the hour situation there. And then we had a decent pullback on Friday, but we're kind of up again decently this morning. But to stay on topic here, the notes, again, 128.15, unfair highs. That's going to be your leverage point for this to climb higher, and we're looking back in time a little bit here. And I didn't think that, well, at the time this was happening back in the mid-Octobers, we talked about that kind of being the blow-off move, and that's going to be the highs for the, in my opinion, that was going to be the highs for the near term. And man, it looks like we are just almost going to shoot for that. Here's the long-term situation on the 10-year. And hold on. Got somebody at the elevator talking about grains here to me. The long-term view, 127.20, 23, 24. That's your long-term support on the 10-year, and you've got the intermediate support now at 120. I'm sorry, let me just restate that, 128.15. And then you've got a kind of a technical damage situation that'll start happening. This 127.17 combined with 127.23 down below on the weekly. So you got a little DMZ of two inflection points on two major time frames down there on the notes. But got too many things going on my screen here. I want to look at, well, let's just, while we're on the note topic, let's just look at the 30-year and give some numbers there. This is kind of amazing. We had a profile up here Friday below price action. That's actually really, statistically speaking, that's usually a very bullish situation when you have a profile up here below price action like that. So it looks to me that, the 10-year and the 30-year could actually climb higher, believe it or not. That is, those rates are very low as they stand right now. I think the 10-year is below 2% now, so take that for what it's worth. But let's get right into the, well, let's reference the S&Ps first, and then we're going to take a look at the XLF, the financial sector, and then we're going to drill down into that financial sector. We had talked a little bit about that last week. not liking the low rate environment that they were kind of counting on rates to move a little bit higher. We're going to take a look at that. But here's the situation on the S&Ps. Talked about this last week, these inflection points, 1994, 2088, as they were outputted last Friday. But, you know, the major support on this we talked about was around 2027. And now we got a POC on the daily. I normally don't pay attention to these, but on a very wide profile, you've got to pay attention to them. And as it looks right now, this 2027. We kind of looked at this as the breakdown point before the rally back. I was actually kind of looking at that from the short side, and then the breadth turned positive, breadth being this positive breadth, if you're looking at the screen. And then we got almost the retest of that. Now we're just kind of floating above. So, you know, the leverage definitely, in my opinion, is still, even with the notes doing what they're doing, is still on the north side. As we look at the breadth, and remember, we talk about the breadth all the time, the weekly stayed positive through this whole pullback, and we found some leverage at 1968 before, considering that, you know, we were supposed to buy that particular level based on that weekly breadth being positive. We had some daily flip arounds here, and that's kind of what was disturbing to me. A couple of these things were around this inflection point 2027, where it was a little bit of a I got stopped out a couple of times there, put it that way. But when we crossed back above 2027 and breadth turned positive, all bets were off on the short side on the intermediate for a while. And considering that the weekly and daily breadth was positive, you know, the good news is above there, you eliminate one side of the marketplace being the short side of the marketplace. Now you've got breadth positive on both sides, and you've kind of gotten back above the inflection points 2027. So now we're looking at the broad market, in my opinion, sitting with the leverage on the north side. All right, that being said, let's drill down into the XLF. And considering that the financials more than likely don't like scenarios like that, here's what's going on with the XLF right now. So we've got a new box that, let me just make sure we've got a pre-market. We've got anything pre-market right now. My goodness, it's raining here. It's 40 degrees and raining like cats and dogs. I don't know if you guys can hear that. So here's where we're at. I think that's a real print pre-market, 2416. We've come down into last week. Let's make sure, hold on. Yeah, we're going to get a new weekly bar starting today, but last week, this particular, E-Signal's weird. I don't know if, well, I love the platform, but they actually do weekly closed bars a little differently on this platform. So this particular level here, 2370, has held a couple times. That was the breakout before close above, go back and retest to move higher. And we were looking at breadth positive all along there. And when we came back the other day on that 1968 area in the S&Ps, and we had the breadth still positive, you kind of had to buy that. And you kind of had to buy this too around this 2370, but we've got a profile low on our daily sitting down here at 2387 now. Let's see. Sorry guys, I've got people hammering me with stuff coming in from the grain elevators. 2387 sitting down below here. So in my opinion, will more than likely, even with the breadth being positive, you've got to be looking at, you know, things that have some kind of beta relevance to the broad market, and most of these, you know, financials do have a sometimes mostly a high beta towards markets. You've got to be sitting there going, you know what, it's probably not the best long in the world, and because the market's going to more than likely possibly gravitate higher with the breadth and every stock in the S&P having that crossover to the north side on the breadth situation, you're probably looking at this as there may be a better time to short this and it's probably not the best long situation in the world based on everything I've just said. So again, this is kind of a wait and see on the XLF, and I want to kind of drill down into some stocks in the XLF, JP Morgan namely. And there's a situation on JP Morgan. You got support right now at 57.33 on the long term and 58.86 on the intermediate. So again, some of these stocks look a little heavy on the XLF, and the rate environment is not conducive for those things to go north in a big way right now. Here's Bank of America. There's a situation there. So if you do have a market turn south and the breadth change on the south side, these may be some of the stocks that may come unglued and start really kind of heading south. Because remember, if the market does come down, and again, right now we're kind of looking at the broad market, in a little bit of a north situation. You want to, in my opinion, play that relative strength game and sell weak stocks in a market that's strong, and buy strong stocks in a market that's weak, or try to identify those in case you have market turns. Right now, again, based on what we talked about with the breadth, it looks like we're kind of still in breadth positive long-term mode, and therefore, these particular stocks aren't looking as ripe as they normally should. All right. That being said, we're going to move into a couple of usual suspects that we always cover. We're going to cover this really, really quick. And we got about a minute and a half before the first break. Actually, I wanted to cover oil first. I'm sorry. Here we go. All right. This was something the other day we talked. What the heck just happened there? This is something we talked the other day about. Enough's enough sometimes, and we've got monetary goals in a lot of our automated strategies, and we had a new profile appear on crude oil, and 47.72 were those unfair lows that we were kind of trying to leverage against. Well, that's what stops are for, and now we're actually gravitating below these profiles. That's another breakout on the downside, and it's okay to be short, not okay to be long right now. Now, we did get a little bit of a bounce when that happened. We actually reached a high the other day, Friday, in fact, of 49.61, but we're trading, about $3 lower now, and that Maginot line, or Custer's last stance on crude oil, is around 47.72. So right now it's kind of a sit on your hands if you're trying to accumulate any kind of crude oil position. There's no, in my opinion, no benefit to really try to start picking battles on all-time lows here right now. And you're going to have some help with some conviction. And we did have a new demand area appear there below, the other day, but you're going to have some help anyway if you start trying to pick bottoms on crude oil. We'll talk about that when we get back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direxion Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at DirexionFunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direxion Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Funds. To obtain a prospectus or summary prospectus, please contact the Direxion Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're kind of finishing up with crude oil here. Again, just the summary statement, I guess, is now it's okay to be short, not okay to be long. We just want to wait and see here. Thought we had a new demand area. I was thinking we might have some targets above a 50.39, but this thing is just super heavy and wow, just amazing. Since $100 a barrel, this thing has turned technically sour, and I'll show you this. There we go, right there. Okay to be short, not okay to be long. For the most part, we haven't talked about going long crude oil in any sense until the other day, actually, when we had started having an orange bar. There was a little bit of a trading opportunity, but now that is over from the long side, in my opinion. Just amazing, actually. While we're taking a look at some of the bellwethers here, let's take a look at gold. This is not breaking my heart again. It's been nice. Above 1200, close above, kind of go back and consolidate a little bit, consolidate again, go higher. I love it. We talked about opting out on some of the shorts on gold. I like this. The dollar is actually rallied like a freight train in the face of this thing not getting too devalued at times, and I'm long gold. So how do you trade this now? Above 1200, I loved it, and right now you got some short-term stops below 1209. But again, if gold's been a little nerve-wracking lately. If you been trying to trade this from the long or short side on any kind of intermediate term basis. And again, maybe not being as heavy in it right now and just letting the thing bounce around and just keeping the stops below 1200 might be in order on this particular product. Hadn't talked about silver in a while. Again, this has kind of been something. This is the daily situation. The target's above 1687 and hasn't, shown itself to, in my opinion, to be as longish, if you will, as gold. So I've been kind of staying away from this on getting the long silver hat and put it on. Here we go. All right. Natural gas. Oh my goodness. Let's just take a look at this. All right. This is I don't even know what to say here. This is something that there's not a lot of reasons to go long this. We were hoping we had a little bit of an orange bar there, and we had a little bit of an inflection point to try to key off of there a while back on the long side. But that trade's been over for a while. 3.089. This is the February contract, and right now it looks like we're consolidating to possibly move lower, actually, which is hard to imagine. I mean, we've got the coldest winter ever, seemingly, and I've literally been cold here in North Carolina in the relatively eastern part of the state, and people are just burning natural gas like there's no tomorrow, but that doesn't really matter, seemingly so. So take that for another indicator. If the cold spell does, subside, which at springtime it should, this thing could actually go lower. So that's my fundamental thoughts on it. All right, let's catch up a little bit on a couple of things that we normally look at. The euro, got an orange bar appearing here. Got some magenta bars on Navigator appearing. This is also in the scanner. When I look at the euro, see that orange cell says that there's a new profile attempting to appear. And as we look at this landscape view, we'll see possibly a new daily profile appear down here, and that may give us some trading opportunities. But right now, this is what's on the table. There's nothing down here to key off of, and we're going to have to wait and see what happens at the end of the day. The short-term inflection points, and again, this is kind of the gift that keeps on giving on the short side. You had a profile high on the 240 right around 1.1848. We've met some short-term targets down below. We're kind of rattling around here, but the theme is still here. It's okay to be short, not okay to be long. And this has been one of those situations where that started about 135.52. And I know Kramer started talking about a one handle on this thing, and that actually concerns me that he's starting to get bearish on the euro from a contra standpoint. But we'll be back. We'll talk about a couple other things that we need to cover and then get into a couple of stock picks here after the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I got March beans up right now. A little bit of volatility here. There's been talking to the guys down in the eastern part of the state, and obviously North Carolina is not the breadbasket of the world as far as growing grains, but they're obviously trucking things all over the place from down those elevators, and they have a pretty good temperature on the marketplace. From a fundamental standpoint, there's some news coming out today. They're relatively bearish, but again, anything can happen in the grain market. So the way that these guys and I looked at this was, we've got about 6 weeks left on the March options. It's 5 weeks left, maybe 5 to 6 weeks. I think they expire February 20th. What is that? 15, 12, 6 weeks? Yeah, 6 weeks left on the March options, and we were looking at the $9 puts just to kind of buy a lottery ticket on that. They were trading about $2 the other day, and if we get a big move down, kind of a volatility spike, these things could have some carry through. So that's kind of the way I'm looking at beans. And again, this is technically speaking, this is the daily situation, and this is the weekly. Definitely okay to be long, not okay to be short on both of those profiles. But when you have reports coming out, you kind of got to throw a lot of that out the window and either stay on the sidelines as a long-term investor, this is a pretty impacting report. Or if you want to kind of trade the news, so to speak, it may be a little bit more appropriate to sometimes use flat out long options or hedge situations, like a debit spread. We looked at the $9.50 put debit spread. I think the 50s, when we were looking at them, we're trading about $6, and the $9 we're trading at about $2.50. So, $4 debit spread. But again, is it worth it to try to capture the $2 to hedge that with? Probably not. That was just basically, kind of a big move impending type thing. And, who knows what will happen, but that's kind of the way we're looking at it. And I'm a little bit leaning more towards the bearish side than bullish side on that report. So we'll see what happens with beans, but that's the way I'm playing that, if that's okay with the guy in the room that was looking at beans also. A couple of other things we normally cover. I'm just going to pull up the yen. This is something, again, that we've been talking about buying support forever, whenever it's provided. And again, this is the situation on the daily, 118, 1920. We kind of get bounced off of there the other day up into 120. These are, 200 pip moves, these bounces here. And we've got another little bounce kind of rally going on today. The good news is on stuff like this is when we get near these major inflection points, you can orient stops around, and that's just holding true for the yen. Still looking at that product to get devalued continuously as time marches forward. You got a Japanese central bank behind that type of trade. And the dollar, I know we kind of sold off a little bit on Friday, but the cool thing is about the dollar now is we've got a new profile that's appeared, a new supply area, and now we've got good long-term or intermediate support at 91.17 now, and targets above at 92.760. And this has been something we've been opting out completely on the short side. Also, recent moves up starting at around that 89 area. And if you remember, we started talking about this switching gears and letting the daily regulate the trade up. Excuse me, the dailies regulate the trade up back. I think it was around 80. Now it's 81 and a half on the dollar when we started looking at this from the long side, and it's really been okay to be long, buy support all the way up since that crossed over on the weekly. So again, turning the rents the same way. I don't see anything to really cause this to change its tune, and technically speaking, there's no damage to that concept, so we're still looking at the dollar from the long side, believe it or not. And if you've been long, again, stops can be oriented around this 91.17 area. If you don't want to be that giving on relaxing your stops to that point, you've got a 240 profile again to regulate this thing up. 92.04 sitting down here. So that's the dollar. All right. So we're going to take a look at a couple of other bellwethers here on the stock side. Apple, got a lot of questions about this, even from family members this weekend. So here we go. Here's Apple. 109.70, crossed above, came back and retested. We're trading 112, trading 112.19 this morning. This is obvious. This is Friday's action, actually. So we got the retest, and we're trading above profiles again on Apple. Targets above 119.75, and it's pretty plainly stated to these folks that on a very stingy basis around 109.70 and a kind of a relaxed basis, stops are going to have to be below 105.64. The stock is really not showing that it's for any reason whatsoever to start shorting this thing. Let's take a look at Twitter. This is kind of a situation that we've gotten back into a major inflection point here on a stock that has really underperformed the market at 40.53, and right now we're trading pre-market 40.21. We've been as high as 40.53 this morning already. Excuse me, we've been as high as, let me see what that is, about 40.60, 65. So Twitter, even though the breadth, again, keeping that in mind, the breadth being positive right now, and the S&Ps have come off a little bit from their highs, coming off of that inflection point 2047. Twitter is kind of a weak stock in a strong market, and I think you've got a decent high probability setup on Twitter right now from the short side, and obviously those numbers are delivered in this scanner. So, and by the way, on the S&Ps, we talked about this rattling around with the breadth positive in here. We had a breakdown below 2047. We were able to buy that because of that breadth on Friday, and then when we got back down below 2047 on the short-term basis, we were kind of sitting on the sidelines when it comes to trying to buy this bounce again. We've had a retest of it. We had a retest again. Breadth is still positive on an intermediate basis. So again, I think you are looking to buy support on the S&Ps in general. Let's take a look at the NASDAQ numbers. Again, new profile has appeared, and we've got that inflection point from previous profile sitting here at 42.0. What is that? Can't see that. I'm getting old. Let's see here. My eyes are getting old. 42.08. That coincides with that 42.06, 42.12 before. So you're kind of right on that area. And again, the breadth being positive on the intermediate and long term, I think you still got to look at that as being able to buy support when it presents itself. And right now, I think the S&Ps are probably a little bit easier vehicle to trade than the NASDAQ right now because of that. Okay. A couple of things I had written down here to talk about. Facebook, haven't looked at that in a while. Just want to kind of give the barometer on this one. New weekly profile appeared let's see here, hold on. Last week. And we kind of reached those unfair highs. Remember, this was in force before that week. And we're going to have a new kind of weekly bar starting today on these signals. 79.27, so we're trading 77.74. And it's held up quite well. We kind of reached that inflection point on the bottom, 76.11. So again, Facebook, in my opinion, is just kind of a hold from the long side, and you can orient stops below this 76.11. Anytime you get a close below 76.11, it might be a time to sit on the sidelines when it comes to Facebook. A couple of things written down here. NPSP. This is something off Stock Twits. It's a pharmaceutical stock. Got some news out on it. Trading the pre-market 45.45. All right, so close on Friday was 41.91. And how do you look at this? The 60-minute, you've got a profile trying to appear here, but right now, folks, with the Stock Twits chatter going on, you have to just kind of wait to see on this one. And it would be nice to start seeing a 240 profile appear at some point today. If you're trading news-related stocks, and if you've been long and caught that pop, that's great. I'm happy for you. But if you're looking to trade the news stocks, going to Stock Twits and just looking at some of the things, I'm sorry, where is Stock Twits? Huh, I lost my Stock Twits screen. I don't know how that happened. But anyway, you've got a situation where you kind of probably need to wait and see on that one. And there's no reason to step in too large yet on NPSP. And this is one of the things, every morning I take a look at this for news related stocks, and technology is going to always be dominated by the Apples, Twitters, the Blackberries of the world, and Facebook's obviously. And it's kind of a cool little situation, just as a heads up, to come in here if you're looking for some intraday action to be able to, like, I'll go into basic materials, Rig, Halliburton, Alcoa, ExxonMobil. These are the usual suspects. But if you see some names that are just kind of not that common, you can always go to them and then kind of, if you've got our indicators, take a look at what's going on with those. There's GoPro, Netflix, Amazon. These are the most talked about stocks that are out there in the social media world. And I'm going to go to GoPro really quick. I've been looking at this a lot lately. And some people were asking about what the heck to do with this thing. You've got support at 57.23. That breadth is positive. The NASDAQ breadth is positive on our scanner. So that's going to be support, 57.23. Breaking down below there, we're going to be looking at that more than likely as a short, but you want that market cooperation with the breadth on trading these stocks in general. So right now with the breadth positive, you're looking at buying support more than likely until that changes. Amazon. You know, Juan and I were talking about this a couple of weeks ago, actually. Here's the long term on Amazon. I just don't like this stock. I think you know, if we can get below 2288, this is going to be kind of a downdraft that's going to stay in force for a while. And you got that 294 on the daily here. But again, this is something market breadth positive, S&P seemingly being technically okay. This is something I would not consider buying. There's a lot of reasons for that, but you've got some technical damage that's going to really start happening below 294 and 288. You may be able to sell those breakouts on the downside when it comes to trading Amazon in general. That's my thoughts on Amazon. Okay, I got to look at this. I think I'm the only guy in my town here that owns a BlackBerry. Okay, so BlackBerry support, most recent support was at 1051. If anybody's trading this, we're below there at this point, at this stage, and pre-market we're trading 1045. So we're still below there. Got a little bit of a bounce this morning pre-market, but again, if we can get back above 1051, we may be able to see this thing climb a little bit higher. The market breadth would have to kind of help participate in that. You got to take a look at the inflection points on Amazon. It's kind of a wait and see now. If you're looking at this from the long side, not a big fan of shorting this stock. Not a big fan of shorting BlackBerry. Something else I want to take a look at, Starbucks. Had some really volatile times in this thing the other day. This situation with Starbucks came off that 83.27 weekly unfair highs. And as we're looking at this, 83.33 really sold off, had some technical damage, opened right at that inflection point on Friday. And let me see where we're at now. 80.17 pre-market. Is that what that is? Yeah, 87. That's valid. 80.17 pre-market. So we're kind of coming back up into the inflection point there on Starbucks. 80.94 are the unfair lows on the daily pattern for Starbucks. That's more than likely to be sold on this particular instrument. You got some super volatility here that is somewhat indicative, traditionally speaking, on market tops on this. I like this stock to go a little bit lower, and that's the inflection point to pay attention to if you're looking for something that may sell off here. Where's the energy sector here? We're going to take a look at the energy ETF here. And again, we were looking at this. We're going to talk about this when we come back from the break. I want to kind of relate this to crude oil. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Here we go. We're going to take a look at the, dang it, I had it up here. XLE. All right. So basically the energy select sector ETF. We looked at this as kind of hanging in there, and we had some, dual inflection points lining up down here, 74.18 on the weekly, and we got a new profile that appeared Friday, 75.23. That little bit of a DMZ. Right now we're trading pre-market 75.41. So, what do you do now? We're getting back down into this daily unfair low situation. Crude oil is actually, just give the latest quote on this. This is real-time quotes here. Daggone it. Here we go. Somebody was asking me about crude oil in an email that came in late here, so I'll just kind of revisit this. It's really still, it's okay to be short, not okay to be long again on this thing. 47.72 is the inflection point. You're going to have to wait at least till that thing gets above there and closes above there on crude oil to even think about this again from the long side. But as crude oil has moved lower, we were sitting on the lows the other day, basically, had that orange bar and a new profile appearing, and we were hoping that we could get back up into 50.39 for a little bit of another, in my opinion, killer inflection point to sell. That never happened, and the bounce that we got, a couple of bucks, just dissipated quickly. But the XLE, So in summary, crude oil is not providing a lot of reasons to go long right now. The XLE was kind of hanging in here, and we had a new demand area pop up. We have 75.23 sitting here. So if you're trading on a relative strength scale, you've got the possibility of looking at a little bit stronger situation with the XLE if you're trying to trade, crude oil related products from the long side. And pre-market, you've got 75.38 sitting here right now. So you're sitting almost pre-market way down here at this inflection point on the XLE. You've got some stocks that are acting similarly on this concept, and you've got crude oil diving again. So if crude oil does rally a little bit, in theory, these things should bounce off the 75.23 area. But the good news is you can orient stops from on the long side right below that 75.23 area. And in my opinion, you've got a little bit of help from Navigator down there, though. There's not any divergent situations going on. And we're going to take a look at Halliburton. We've been as low this morning as 38.20. We're trading 38.93 right now. And that is, let's kind of blow this up here. This is one of the things we were looking at from the long side. As crude oil was making new lows, this was kind of coming down into that 37.84. But what do you do now? We're kind of getting back below this inflection point. So the XLE is looking like it's going to open up on support, which may be a trading opportunity in Halliburton. If we can get back above the 39.37 area, you may be able to start nibbling on this from the long side. But again, folks, crude oil is, again, looking relatively bearish. But things could turn around, and these are the kind of anomaly situations that you may be able to take advantage of if crude oil does happen to start climbing north at all. ExxonMobil, we got to take a look at it. We got about 10 seconds here. Looked at this from the long side on the weekly other day, and we talked about this 89.49 combined with 89.66. So we got that bounce, and what do you do now? I like ExxonMobil. Thanks, guys. Steve Rhodes is next. We'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.